For a second time in 2 months, the Bank of Canada held fire.
We maintained our policy interest rate at 5%.
After 10 rate hikes since last year, Governor Tiff Macklem says it's time to wait and watch.
Monetary policy is working to cool the economy and relieve price pressures, and we wanted to give it time to do its job. We cannot let high inflation become entrenched in the economy. If inflationary pressures persist, we are prepared to raise our policy rate further to restore price stability.
The central bank expects inflation to average around 3.5% until the middle of next year, and ultimately return to the 2% target in 2025. A pessimistic forecast, according to this economist.
We think it's a little bit on the aggressive side in terms of the upward revisions. We think that the Bank of Canada should be able to bring inflation back down to roughly its 2% target by the end of 2024.
The Bank of Canada also revised its outlook for growth down, forecasting 1.2% real GDP growth this year instead of 1.8% predicted in July. Growth next year will be weaker still, the bank said, dipping below 1% before rebounding to 2.5% in 2025. Governor Tiff Macklem said he is not forecasting a recession, but some economists are.
For us, we're expecting a 0.5% contraction, which would actually put the economy in sort of a technical recession, so to speak.
We think that a recession in Canada is going to be short and shallow. This won't be your mother or your grandmother's recession. This is going to be something that's really engineered by the Bank of Canada through higher interest rates to help bring the Canadian economy back down to balance.
Nivrita Ganguly, Global News, Toronto.